What's up, everybody? Welcome to another Money Monday, where today we're going to be talking about should you be investing. But first, you know what to do. Roll that intro. So I get asked this quite a bit. How come you don't talk about investing, stocks, bonds, all that good stuff? Because that is what you went to school for, and that's what you should be talking about on YouTube. Yes, they are correct. I rarely, if ever, talk about investing, stock tips, anything along those lines here on this YouTube channel. And I do that for a couple different reasons. Primarily, number one, is because everybody's situation is different. When it comes to investing, everybody has their own particular set of risk that they are willing to accept. Now, when I was younger, it was very risky. I was willing to ride it out, play the blue chips, penny stocks, all that good stuff, and just let the money ride out. But as I got older, I got a little more conservative in my approach because I don't like losing money. So the first risk level that I want to talk about is very low risk. This is going to be your most conservative investors, and this not quite where I am yet, but it's where you're going to find a lot of your senior citizens, those who are close to retiring. And the reason for that is they are investing in safer assets. You're going to find a lot of these typically like in your government securities, bonds, like treasury bills, bonds, or you're guaranteed a certain rate. So if I was to put in $1,000 for a bond, I'm willing to get back 1% to 2%. Now it's got this different trade-offs, so watch that video that I have down there on inflation and about basically the parity of money and if that's right for you. The second type is going to be medium to low conservative type of investing. That's where you're willing to take a little more risk, and you're going to find this where corporate bonds come into play. So think about your companies like Ford, Apple, things that affect. If they were to issue out a bond, they're willing to pay a little bit more premium than like your government rates. So if the government rate was paying 1% to 2%, you're going to find that these companies might pay between 3 to 5. It's whatever the market rate is at that point in time. So it's a little bit more risk. But obviously, if you're investing in a very valuable company that's continually making products, has a competitive advantage, odds are they're going to pay that back. But there's always a risk because that company could go bankrupt. They could have some sort of investigation that is underway that's going to cause that company to lose cash flow. Now, moving up a notch above that, you're going to find your medium to high investing. That's where people are willing to take risk. That's kind of where equity stocks come into play. So when I mention equity, securities, these are going to be your stocks. So think about it like your Standard & Poor's 500, your Dow Jones, NASDAQ. So when you get into the whole realm of like investing stocks, there are so many to choose from. Well, now you got to worry about exchange traded funds, also known as ETFs. Vastly different. Lots of different types of stocks and equities and instruments out there for you to choose. So where to even start? Well, we're not going to talk about that here in this video, but what I want to talk about is that higher range. Because typically when you're investing in stocks, it's going to be 3 categories. And I'm going to limit this basically just to the S&P 500. So you got your small cap, you have your mid cap, and large cap. So go online, research those, and understand what those are. Basically what that tells you are smaller companies, medium-sized companies, and large companies. So think about new companies that are starting out. Are you willing to take the risk? Might be a little riskier, right? Because they don't have a proven track record. They don't have 3 to 5 years underneath their belt. Some may. Then you have your large companies who's been there 20, 40, 50, 60 years, like your General Electrics. You got Microsoft's been out for quite a while, probably not going anywhere anytime soon. And so you're probably a little more comfortable putting your money into a company that's been around for a while. And so that's why I don't typically mention stock tips, anything like that here on this channel, because everybody's risk tolerance is vastly different on here. So with that, I want you to kind of pick out where you are on there, and I'm going to put some links below of some companies that I trust. Yes, robo-advisors are something that's new, but something that I've been experimenting with, and I really like some of them, so I'm going to put those down below. There's also a few others I'm going to put in the link below that I personally trade with as well, just because I like the tools that they offer, some of the instruments that they provide for me, and most importantly, because commissions are super low. So I hope that helps kind of give you like just a very general basic overview of, the different types of risk levels that are involved in investing. So until next time, guys, thank you for tuning in, and I'll see you next week.